What are your thoughts on the key asset class areas for the combined business?
So I think when you look across the individual asset classes as well, within equities, we're good at developed markets. Aberdeen, very, very good at emerging markets, and also building global capability using that emerging market strength. If you want something that's more traditional, you would probably come to Standard Life Investments. Aberdeen have a really good quant team that's helping to build sort of passive and then what we call enhanced index solutions, something we don't have. Our multi-asset absolute return capabilities kind of speak for themselves. Property is the one area where we're of kind of comparable size. So when you dig down right into the entrails, what you find is two quite successful, non-traditional asset managers that should be able to come together and make something really, really significant.
When you were doing this merger, did you agree a future investment philosophy, or are you going to let that develop as it kicks off?
Well, we both had a common investment philosophy, which is a bottom-up stock picking style. So we already have it, and of course we will.
And that was common to both of you.
Yeah, common to both, and we'll try and take the best of both. Though we're not going to come in and say, look, this process or that process, but they're very similar.
Yeah, I think just to add to that, I come back to this point: 670 billion of assets. You're going to have to be a broad church. You can't just point 670 billion of assets at a particular investment style or philosophy. What's really, really important is, because of the complementarity of the business, we need to create a mechanism where, as Martin says, we can share insights. So actually, as we share insights and we think about what we've sold to clients, we can improve their performance and their experience through the scale and the combined insights that we get. So I think it'll end up being a pretty broad church.
Let me come on to the combined investment business looking forward now. What's the structure going to be?
Well, what we've done is we've announced the heads of the various asset classes, and so that's all decided. And now what we're doing is working down on the next level down, just making sure we have the right talent. And one of the great benefits of this merger is it allows us to retain talent.
And the scale helps you to do that.
Well, because our profitability goes we'll be making over £1 billion profit on a pro forma basis. So this is a big company. Asset
management's been under the spotlight, particularly from the regulators. The FCA did its market study. What are your thoughts on what it had to say, its effect on the enlarged business?
I think the FCA are by and large right. I think one of the things we need to reflect on as we approach the 10th anniversary of the financial crisis is trust in financial services, trust in asset management, trust in experts is pretty low, and there's a whole bunch of stuff we need to do to improve that trust. Simplicity and transparency of what we offer, value for money clients want, is really, really important. So I think both of us basically think what we need to do is get with the program, because that asset management review, rather unusually for a regulator, has given us an opportunity to help rebuild trust. We have a big job to do here, and I think what the FCA have proposed is very sensible and balanced as well. So I think both of us embrace that very, very much.